we'll get started. Welcome, Patrick. Thank you for doing this tonight.
Hey, thanks for having me, and thanks for showing up, everybody, and looking forward to being of service to you in any way I can. One of the most important things I try and do is give to you, and it's not to get, it's to give to you. That's my service to the community. That's what I'm trying to do. I put the deals together. I try and make it happen for everybody. There's no obligation in any possible way. If you want to go to another lender, a bank, whatever the heck that's good for you, we're going to find the best solution and the best fit for you. And that's what matters. So I wanted to talk about refinances tonight. Why do I talk about refinances in commercial real estate? Well, the reason is because wealth-seeking investors want to invest and grow property portfolios. One example is here on our PowerPoint, where people started out, 15 years ago, 10 years ago, and the low cost basis, they had a 19 unit, maybe for $1 million they bought it. Now it's worth 3.4. Now they got a low balance, and they go out and they buy a 54 unit apartment building, and you add the 19 units to that, and they now own 73 units. It's a path to wealth that people have to realize is a process and a sequence of building this wealth. And the investors like adding commercial real estate to their portfolios. It appreciates in multiple ways, and due to market scarcity, or the property becomes much more valuable based on the income it generates. That's how this whole thing works. And that's how I'm sure you all know this. I'm just sharing with you what you already know. Borrowers want to purchase the property while the business is maybe in a lease, and they have other options besides just going for a straight up acquisition. They might have another property that they could refinance and pull the cash out. The equity's just sitting there. There's a lot. They want to participate and build equity in the building. They want to earn additional revenue through monthly rents and enjoy the tax benefits. It's just, you're stacking different terms and features in order to achieve more wealth. So that being said, let's go ahead and see.
So when you're talking about this, like from a commercial standpoint, the same thing would apply to residential, wouldn't it?
It does, but residential and commercial are significantly different. And so the motivations are typically there for commercial. You can't really take a template of residential and put it over commercial real estate and go, oh, I see the whole picture now, because they are two different animals, really. And especially with the Great Recession that we had, all the consumer protections make the investors very skittish about doing anything that is not a business. Therefore, we encourage you to become a business and get an EIN number and get that business seasoned to at least 2 years, and then you can start borrowing. There's a lot of little silly rules that the banks and the other credit unions and traditional lenders play, and we'll talk about those too. But when I say silly, I'm referring to them from my optics, not theirs, obviously. And conservatism is good to a certain point, and I appreciate their point of view. Anyway, so what we're going to do now is talk about, is someone trying to talk?
No.
I'm not sure what's going on here. Well, anyway, not sure what that is.
You're fine.
Okay. Where do people go for a loan like this? Unfortunately, the different investors or business owners that want to refinance the real estate business have found that banks and credit unions and other traditional lenders really don't offer a lot when it comes to cash out, or they severely limit the amount of cash back for the borrowers that they're not able to access. But When you do find a lender, and we hope you do, one right here, um, somebody's talking to the phone maybe or something in the background. Many commercial loans generally require a balloon payment at the end, and they use shorter terms, somewhere between 5 and 10 years. Refinancing is simply a way to reset the mortgage clock. And every 5 or 10 years, everybody's got to do that. That's in commercial. That's just the way it is. The borrowers typically find themselves in a situation where they need to go to mortgage brokers, typically for the help they need. And the reason is they have to secure higher loan to values than they're going to get from traditional lenders. That's it in a nutshell. Loan to values are basically how much cash you're going to be able to get out. So, for example, we'll provide funding with very hard to find traditional alternative, non-traditional rather, alternative commercial lenders who depend on the credit offer, and they start out in the banks and credit unions usually will give you 70 to 75%, and then you've got hard money lenders that'll go anywhere from 65 to 90 depending on what they're doing, but they're not usually available to you. They go through correspondent relationships with mortgage brokers, almost always. The brokers are a good group to deal with. Think of them as an independent insurance company or an agency where they've got 250 products versus carrying 3 or 4 for a franchise, for example, or a bank, for example. When I was back in traditional banking for many, 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 many years, we had 2 or 3 correspondent relationships, period. And that was mostly a split between commercial and residential. You're stuck with whoever you're representing, and they only have X amount on their menu. So that's the value of going to brokers, the commercial real estate brokers. So a lot of borrowers find out the truth when they go to banks. A perspective is that the bank should be my first stop, especially if I've got a depository relationship with them. And that's where the banks try and cash in on that because it's a sales culture, and they kind of insist that the branch managers really push the bank in their lending policies because that's where they make a lot of money. So what we find is that unfortunately borrowers are turned down at abnormally high rates. Think between 68 to maybe 81% are turned down of the people who apply at banks. I don't think people know that. The SBA is another place, very close to 80% turn down rate. The SBA, a government agency, is a guaranteed agency, but you have to go through lenders, and they have rather stringent rules. So unfortunately, when people are turned down or declined, there's a point where the prospective clients reach out to commercial loan brokers for assistance, and that's where we come in. The simple way to look at this is you're getting extra cash. Not only is the money source considered tax-free, but it can be used for any purpose without restriction.
I've got a good commercial friend, or a good investor friend. He has a lot of commercial properties, and that's what he does every 10 years or so. He refinances it, pulls out the cash, and then uses it for other investments.
Now, we find a lot of people are doing it every 5 years.
Yeah.
Maybe they want different terms, or they've got an adjustable, or a number of variables. Many have these maturing loans where somewhere between 5 and 10 years, they have to refinance since maybe they've got a balloon note at the end of term. It's very common to have borrowers have a need to find a source ahead of time to refinance on a recurring basis. So you build relationships in this community. That's what this is all about, is you find people that you're comfortable with, that are helpful and are thinking of you and how to put everything together for you, what's best for you. That's what you're looking for in a lender, in my opinion.
Yeah.
It's it's definitely something that you have to concede is really the bottom line. And what we find is there's a lot of property upgrading that's necessary when you have these big projects. They are in different levels of shape when people buy them. And if you put all your dough into the property with a big down payment, you're baked before you even get started. So you got to wait for a little while and find a way to pay down that mortgage and decide to refinance so you can get the cash flow back higher, via higher rents. So you want to reinvest money in your property. Just like you reinvest in your business, you reinvest in your property. So sometimes the property is not right yet. What happens then? They have a thing called gap funding. What the heck is gap funding? Gap funding is where typical borrowers secure short-term loans to bridge the gap between their ability to get a refinance and fix up the property first before the lender will even touch it, especially in areas that are targeted. And targeted means, would you go there on a nice walk by yourself after 9 o'clock at night? So I guess what I'm trying to say is that they're not ready for bank financing yet, based on the condition of the property. And this is a loan that locks in the monthly payments and gives you flexible terms, but typically carries a fairly high interest rate, maybe less than 10%, but it's up there. So the borrowers are eager to replace this gap funding with a refinance as a longer term solution as soon as they're able. So they don't stick around in this, they reinvest and refinance again. So they dodge upcoming balloon payments, they meet pending major expenditures, and they get additional working capital. And that's why people want to cash out. That's why people want to cash out and get this additional working capital. So they're always chasing better terms, always chasing better terms. Here's a situation where you've got a deteriorating neighborhood with increasing property tax problems. Everything's going up, and yet you're losing tenants because everybody and his brothers come in and started rehabbing rentals around you. And you can't compete with it. Now you got to fix up your place. These are some of the challenges that people end up running into.
So Patrick, I get a real dumb question. So what defines a commercial property? So could you have like a 4-unit? Would that be considered commercial property?
No, it would have to be 5 units and up.
And up. Okay. So would a portfolio of houses, would that constitute commercial?
Yes, because typically people wrap the protections that they're seeking under a business for tax write-offs and have an EIN number. They have different forms of various insurances and maintain protection from liability.
So if I'm an investor and I own 30 houses and my limited liability company has the tax ID and everything, then I could roll all that into a commercial loan?
Absolutely. Yeah. In fact, we have a name for them. They're called blanket loans. And these blanket loans can be bundled in large packages or small packages. It's mostly based on dollar amounts.
Okay.
So, but there's a lot of benefits to that, but there's also some, cons to that, which, we can talk about when you call me. And I will make every effort to keep it as safe as possible for you to meet your needs. And
Got
because sometimes the banks want to get their money back. They like prepayment penalties, all these little variables that sometimes we can work our way around, and we'll package it properly for you. So you don't want to run into the buzzsaw of losing your depreciation benefits. So what do? You reset the clock and refinance. You lose your depreciation, it's gonna be a painful bite, tax consequence. So what you need to do is consider the merits of refinancing at that point. Maybe you need to trade a refinance that you rushed to get the property with, and the fastest thing you could get was a hard money arm from somebody. And now you need to refinance it and get into a fixed rate mortgage, something that gives you more security.
Got it.
Or you could pivot into a upwardly mobile, larger investment property with new depreciation benefits and a much higher rent and a higher return. So ultimately, borrowers look to cash out from their equity on existing commercial properties for working capital or other business expenses. And one of the most common motivators on these are these cash out refinances. And there's really very little that can't be done on these loans if you get with the right people. And what do I mean by that? You don't want to go to somebody who's going to limit you on how much cash out you're going to get, which is traditionally the approach. And that's why people end up with different lenders. So the brokers are the favorite group for commercial refinances. And borrowers who are investors or self-employed individuals, for example, might have difficulty producing tax returns. That's painful. And after they struggle to meet the documentation of the banks and fail, they regularly seek out commercial loan brokers. And this way we can establish a need for a strong relationship, because with a number of or some commercial loan brokers, because they offer reduced documentation and stated income. Different things you can't get anywhere else, and they're hard to find, things like stated income now.
Got it.
So the property may not be stabilized, another one. What does that mean? Well, the banks want to see a stable situation where you've owned the property for 2 years. That's what that's about. And before they approve your loan request. So if the borrower hasn't recently, it's only put in six tenants in their apartment building or office space, they're going to have a problem. They need a lender with much more flexible options and help them carry it out. Maybe it's going to take the form of gap funding. Whatever it is, they're going to help you meet this crisis where you can't meet these stability requirements.
Got it.
And sometimes there's problems that creep up that you wouldn't expect, like no seasoning on the title. The banks, once again, there's a common need for seasoning flexibility, and working with commercial lenders can help business people refinance and look to lower their monthly rate while they try and get settled and get over the hump with something like no seasoning on title. We're solution specialists. That's what we do. And so you'll see that you'll soon find out when you visit people that are in the lending field, that there's people that are looking out for themselves and there's people that are looking out for you. And the people that can solve the problems the best and the easiest and the fastest way for the lowest impact on you and the best are what you're after. And that way you can quickly grow your business. So here we're looking at cash where you free up your excess. It's all tax-free, and you would still retain future use of your 1031 tax exchanges, and you'll be able to defer taxes for the rest of your life. And again, as always, consult your CPA. There's different things here, but basically, we recently had somebody who got a higher rate to get out of some gap funding, but it was only 1 point higher, and they decided to stay in it because the terms were so good. They got an 8% refinance mortgage instead of, and they previously had a 7, and now they see the increase in their tax shelter benefits, and they're actually paying out slightly higher rate of interest to their lender, and they're actually lowering their payments, believe it or not, after all the tax consequence in the end when the dust settles at the end. So there's a lot of different approaches and different ways to, peel the banana. And what we feel is that most people need some alternative lending to get things done, especially in the commercial world. So there are differences, as I explained in the beginning, which is slightly higher rates than residential mortgages, but that if you find a way to a broker, you'll be in a position where we can solve the problems and keep the cost down, keep the rate down, and keep it attractive. And you may have to refinance slightly more frequently, but everything has its little price tag. But everything also has an end benefit, which is to you, which is less tax consequence and more relief from payments or increases cash flow. So they structure these. I'm just talking about gap funding here. We've already talked about that, but here's what you really need is to just call me. I can give a lot of help to you. I can structure transactions for you. I can put together what you need and do it all freely and give you advice. I just the other day sent somebody to a credit union because that was what they needed.
Yeah, and that's, Patrick, that's what I like about you. So, but if anybody's got a question, feel free to ask or type it in, or feel free to contact Patrick at any of these places. The email's there, patrick@neededfunding.com. The telephone number, the 855-734-1122, or just go to the website. There's a form you can fill out right on the website, a contact form.
Yeah, I did see something on nonprofits that came up that somebody sent a question into, and I wanted to kind of address that real quickly. It is a commercial enterprise because it offers residential services, or the services are performed in context of a public entity. So the second question I think was there. Does a nonprofit require a guarantor for a loan? And often loans to nonprofits don't require guarantees. However, in some circumstance, lenders might have such a guarantee required as additional collateral to the security for a loan. Let's say that the organization's had a difficult financial history. Things of that nature. There are nonprofit lines of credit that would help you bridge the gap and get your act together in terms of having the capital to meet your short-term obligations in the meantime, and we can certainly make those arrangements for you as well. So hopefully this has been of some help to you, and any questions or anything I can do to offer you services or help you. I just talked to somebody today for an hour, and we decided that the guy needed to do a lease option to get and tie up the property and get what he wanted. There's a whole range of opportunities here in terms of the analysis. So if I can be of service to you, that would, he wanted to borrow, he wanted to borrow more than he was able to afford. And that was where we were bouncing around because he's with his credit scores, he wasn't going to get to what he needed to get to a $500,000 loan for what he was trying to accomplish. And I talked to him and suggested that he tie up the property rather than lose it. And he's called me back 3 times today to thank me. I don't know what prompted him to do that, but anyway, he did it. So anyway, hopefully this has been at least mildly entertaining in terms of the information, and it's been of assistance to everyone.
So if there's no questions, I don't see anything in the chat, no questions, then what we'll do is we'll end the meeting. We appreciate you guys coming on, and we'll have a new topic once a week here to talk about. So thank you very much.
Yeah, thank you again for coming.
Thank you, Patrick.
Deeply appreciate it. Yeah, thank you so much.